Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It is Tuesday, and I guess everyone got a little bit of something. If you came in yesterday looking for some kind of oversold bounce with the oscillators down -50, looking for that tactical red dog reversal type trade, it developed yesterday where you had some brief weakness and we closed strong, and then today, opened up a little bit and then basically ran right into resistance where the market was rejected. So if you came in long looking for a little follow through, you got it. If you were looking for some kind of cute short into resistance and you were calculated and not too early, you also took you had that trade as well. A lot of people are a little upset about the action today, but I actually think it's better, because if we would have just had another strong day and created that pain type trade where when you sell too early you're upset, or you try and just fade a move and you can't make any money short, that's not that much fun either. So if you look here at the chart of the spiders right now, you'll see here was your reversal bar yesterday. Okay, it showed some power, took out Friday's high. Then today you had a bit of a doji. Okay, what did we do here? We basically almost filled the gap that we talked about from the morning call, came into the resistance zone, and market didn't really know what to do, which is fine. The market, why would it know what to do? You have some talk about another soccer game getting what's it called? Whatever, everyone had to leave, and with a van full of explosives, etc. So people don't know if there's going to be more attacks. So why would the market run away? So at this point, this is what we know. We know that we had a bounce from oversold levels, okay, which is exactly what happened here, which was about from the low back here in September up to the high here a few weeks ago was a 38.2% retracement, and now we'll see if we have some inside days. And then once we take this out, we'll know if we're going back towards the high end of this range or if all of a sudden we start meandering back lower. So what you want to do is write down 204.88, that's today's low, and then you have obviously today's high, which went right smack in the middle of that range, 207, and we'll see how we open tomorrow and we'll figure out the trade. Other sectors to run through real quick, same type of thing. You had a little bit of follow through from yesterday's reversals. You didn't get a heck of a lot. Here was your reversal yesterday in the red, that RDR with the tactical spot at 113.66. You had a bit of a push right into resistance. So first time at resistance, it got rejected. Two-way trade there. Now we'll see, what transpires moving forward. Not much to do there. IBBs were a little bit stronger. Flowed out green. This was your breakout pivot that we wound up holding. Still below the 200-day, below all the moving averages, below this descending channel here. So still, the jury's out on which way we're going to go for real. At this point, it was just a bit of a bounce. So keep taking those trades. You did have some stronger names that acted well. I know we've been focusing on Netflix. Netflix had a huge engulfing day yesterday. Traded through our little technical buy area and actually held it. So that was right there. It's just kind of cute. Or not really that cute that it had a break down here before coming right back up. You did get that tactical red dog reversal yesterday. Traded below 103.27, put a low in at 101.86, so about not even $2 to get you a huge move and then some decent follow through. So now this has reclaimed all the moving averages and looks like one of the strongest stocks out there. Facebook reversed yesterday, gave you a little bit of a push. It's still going to have to probably wedge again and need some time. This was our calculated spot, kind of holding in there. We'll see if it can work its way to the upper end of this range. All in all, nice day and a half move both ways. You had your short and you had a quick morning move, and then you had your reversal into a little bit of follow through. So now we'll see what's next. At least as two-way action. Amazon, same thing. Amazon gave you two types of trades today. We talked about it in the morning call. First was off the 21-day. Then that big reversal was up $5 this morning. So you could have faded that, with the huge travel range that you had there. So, if you look at yesterday's high, it was 649, hit pre-market 653, and we talked about, 655 being a spot to either sell you long or maybe even get short. It was somewhere within this wide range bar, and now, it's in this end of the range. So tactically, 3 days down into the 21-day, you nibble and buy. Maybe you took it overnight and you sold, and who knows, maybe even got short. So again, two-way trades versus having to have excessive risk. Same thing for Google. Google touched and held the 21-day moving average, gave you a small RDR with this tactic right there, 739-ish, opened up a little bit and came in, and now it's, needs some time, and it's just a choppy back and forth trade. And if you don't like choppy back and forth trades, then don't trade these type of scenarios. One of the, the problem spots today was oil. Oil likes to be, above 45 to 49, and now, it's basically back below 44 and, flirting with 40. So below 40, the market kind of gets a little worried. So at this point, it still did not break this level here in the USO, but if this were to break here tomorrow, you'll probably see a little bit more pressure on the overall market. This was the range that it liked before breaking below it, and obviously it's well off the upper end of the range. So anytime you get into the lower end, you're going to start seeing some volatility pick up if it heads back in that direction. So with all that said, there was definitely some back and forth type action, some things to do. The futures were higher, pulled in by the time the open happened in about 45 minutes to an hour, gave you a quick push back into resistance, so you did get a chance to buy. You didn't have to be long overnight. And then you did get a spot to sell, and then with all the news about the German stadium, this and that, we pulled off and kind of made that doji that we talked about. So little indecision right here, rightly so. The oscillator went from minus 50 to almost neutral today, so now we're not oversold. That's not going to help, so now we have to figure out, are there buyers higher? And there's definitely not buyers higher everywhere. Everything's kind of mixed. There's some weak stocks that are just getting thrown out that you don't even need to look at. I just got to throw up this SUNE because I remember in my recap, everyone was trying to buy a dip in SUNE because all the big hedge funds said they owned it, et cetera, et cetera. Here was your somewhat outside day. Here is when your trend broke below the 8 and 21 day when you sold it. Here's when big support broke. And then here's when it lost a 200 day. You do not hold it as a swing trade when it breaks the 8 and 21 day. That was at 29. You do not invest in a stock that gets below the 200 day and stays below the 200 day. And if you followed those rules, you are not stuck in this disaster because some hedge funds owned it down here at 3. Have a process, fellas. All right, gold right here, real quick, new lows on the year. This too has been in below the 200 day pretty much for all. This is when it broke the 200 day, by the way. This was your trend that broke right here. Here is major support that basically told you that it was done, and then it's been below the 200 day for pretty much ever thereafter. Probably 97% of the time in 2015, it's been below the 200 day. So that's a downtrend. Little trades along the way, but the strength has been sold, and now here we are at lows on the year. So don't ask the question, how did this happen? The trend has been lower. So at this particular point, I'd say keep risk down. You had your oversold bounce. We're still off the highs. There's really no rush to buy things, I don't think. There's still going to be some headlines back and forth about ambulances full of explosives, about Times Square being evacuated, this and that. So you got to listen up and hear what could be real, what's just a rumor, and then trade the ranges with a prep plan in front of you of price points that make sense. Because if you short too early, you might not hold, and if you buy a dip too early, you might be wrong, get out, and then be right 10 minutes later. That's the kind of market we're in. I'll see you tomorrow morning at the morning call. Have a good night.